Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors. Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. Hey, it's just over a week since the U.S. elections, and we're learning a little bit more about results and getting some signals from the incoming Trump administration as it relates to policy and all that. And what I wanted to do in this episode is go just a little deeper on that. So, in some ways before the elections, it's important to kind of think about it from the perspective of voters, right? Like what might be influencing the outcome. But once we get through that, we can kind of narrow our focus on the policies and things that are more focused or influential, might influence the economy and the market. So that's what I want to try to do today. And I guess just to jump into it, we know that President Trump ran on an America First campaign almost, and also is talked a lot about, and we'll try to implement deregulation. So those two themes are going to weave through these areas. And in fact, to start with deregulation, of course, we know that a lot was put in place by the Biden administration, so there will be almost like this idea of rolling back a lot of those regulations. And examples would be a less aggressive Securities and Exchange Commission, the SEC, and that will benefit financial services. We've seen a move in the market. I'll get to that in a second as it relates to financials. And then another example would be the Federal Trade Commission, really, and maybe just there being less pressure to block mergers and acquisitions. There was still some that don't get approved, basically, or get blocked. But just think of it as the M&A activity kicking up a little bit. Next up, I would say, is healthcare. So essentially, RFK Jr. has been named as the sort of the nominee to lead the Department of Health and Human Services, and that he's talked a lot about health. So he's being considered. I will say, the majorities that the Republicans have in Congress, most recently, right now, they're right at the thin edge on the House, more seats to be counted, but at 218, the punchline is that means the checks and balances, both within the Republican Party and then for things that are requiring bipartisan support, basically things are going to happen only when those approvals are required, only when they get those approvals, and there's a lot of cooperation, right? And so anyway, long story short, back to the appointment of RFK, he's going to have to be approved. And so we'll see how changes go there. Next up, military and defense. So we know that Trump favors a strong military, but he also talked a lot about trying to get parties to come to the table, and I think it's both Russia, Ukraine, and Israel, Hamas, in each respective areas, get people to the table to negotiate a peace, like essentially stop the wars is, I think, one of his goals. So we'll see if he is able to pull that off. But more broadly on foreign policy, we know with that America First approach, he's going to come out of the gates with a bunch of tariffs. We know for China, that's going to be a little bit around trade negotiation and kind of trying to limit competition a little bit. And then more broadly, especially with our allies, let's say NATO, there'll be tariffs, and there will be essentially discussion, as he's done before, on NATO countries, quote unquote, paying their fair share. So we'll see how that all unfolds. I would say that energy, we know that there's a real climate focus in the current administration, and we expect that to be unwound a little bit. Trump could very well pull out of the Paris Agreement again and repeal certain rules in the EPA, really scrutinize alternative energy like wind and solar more fully, and at the same time basically be more supportive of oil and gas. So we would expect this shift in energy. So, at the end of the day, some changes in that regard. Now let's get to the budget a little bit. First, taxes. So the administration, talked about things like eliminating taxes on tips and overtime pay, et cetera. And that's kind of popular. So there's actually a chance that that could garner some bipartisan support, or the kind of support necessary to get it done. But, for example, the idea of just fully extending all the tax cuts from the 2017 Act, we don't see that happening. So there will be sort of this lobbying for lower taxes, probably not a ton that'll get done in that regard. And so we have to be, kind of measured about whether we think anything like that's going to happen. But back to the budget, we know that Trump has appointed Elon Musk and Vivek Ramaswamy as the co-heads of the new Department of Government Efficiency, and basically set a deadline of, I want to say, July 2026 to kind of get through essentially a reduction in regulation and expense. And that, candidly, I think can result in some reduced government spending. So that, combined with the idea that we don't expect bipartisan fiscal stimulus legislation, so fiscal spending is going to be more reduced. And so all that translates to the strong potential for a lower deficit, which, of course, we've been talking about and we're favorable towards. We think that there needs to be focus on the deficit and the debt to rein things in a little bit. One final thing, and then I want to get to the markets. There's always talk about, well, is Trump going to go after the Fed? Is he going to try to influence it too much? The reality is, historically, presidents have always either lobbied, or tried to put pressure on, or just engaged with, typically the Fed chair, right? So Clinton and Obama both had regular meetings. We know that Nixon pressured his Fed chair to keep rates low. And Carter and Ford had sort of tense relationships. So, even though it'll get a bit of press coverage, the bottom line is what Trump's doing is pretty typical. And yet we still have a strong view actually, that the Fed will remain independent going forward. And so we're not overly worried about that. In any event, all of this is sort of added up to increased animal spirits. So people are just, as it relates to business, as it relates to the markets, and kind of the way that is all interwoven, there's just a general sense of a positive view. Since the election, the broad market, the equity market's up. We can see some of that sense of things like financial services in that sector's performance, which is up a little bit more. And then you go even deeper into regional banking, and our KBW regional banking index is up even more. And so that, coupled with, actually, interestingly, the VIX index, which is a measure of equity volatility, sort of bumped higher as we got to the election day. But once it was clear that it was a decisive outcome, then things really have calmed down, and volatility in the day, right, day to day, is just really calmed a little bit. I will say, of course, with this further run up in the markets, but valuations are pretty what are called rich. They're high. So, we shouldn't expect it to keep going necessarily in a strong way. We should also be mindful that any kind of little bad news or skirmish somewhere, whatever, we could see some movement down in the equity market. Now, we don't try to time those things. We're long-term investors. It's really hard to time getting out. It's even harder to time getting back in. So as long-term investors, of course, we're counseling clients to remain invested, but maybe with a leaning towards quality. And so that's been an overlay to what we're talking about. Listen, that's what I wanted to get into in this episode. I know we're going to see so much more coming out. I didn't really get into the appointments. All that has to go through the process. And so we'll have a lot to talk about between now and Inauguration Day, and past Inauguration Day. And of course, I think as time goes along here, we'll broaden out back to things like, I know we've got some inflation that's come in, and we'll talk about Fed policy and all that. Anyway, thanks so much for listening to this episode, and we'll catch you on the next one. Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.